right. Go live there. All right, welcome everyone out there in YouTube land. My name is Alethea. I go by Rain on the Charts. How did I come up with Rain on the Charts? Well, actually, Rain is my middle name. So, you know, I'm on the Forex charts, or not only Forex, stocks, indices, what have you. And let me not even front. I don't really mess with indices too tough, but you know.
Binary charts.
Binary options, yes, that is actually my wheelhouse. That is where I started. And once I get settled, I definitely plan on doing some sessions for that. I apologize. Now, where I'm living now, you will hear the sounds of New York, of Brooklyn, where you wouldn't hear it before, but you're gonna be hearing it now. All right. So it can give you a feel of, hey, you're here with me in Brooklyn, Park Slope. All right. So I'm going to pull up the whiteboard and welcome Bernie. Welcome to the call. It's been a while.
Thank you. Glad to see you.
I'm so glad to finally be back. So glad to finally be back. Let me go ahead and stop sharing the sound, and then I want to pull up the whiteboard today. There we go. Now you're hearing all kind of sound. Okay, I'm gonna move this down to the bottom, pull this up to the top. All right, so we have the trending markets, and there are two trends. Who can tell me what the two trends are?
Uptrend and downtrend.
Absolutely. We have the uptrend and we have the downtrend. So let us talk about the uptrend first. Right? So for the uptrend, we're looking at things moving from bottom going up, right? It's going up. Now, while it can definitely move like that, it doesn't move that way. It's actually going to move up, down, up, down, up, down, up. It moves more like that. You're not going to see one smooth line going up unless there is some news occurrence, right? So that's the uptrend. It's not going to be a smooth line. It's going to be zigzag motions, but going up. But how can you truly know that, yes, this is an uptrend? Because if you see something move like this, down, 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 down. That's not an uptrend, right? So how can you spot an uptrend? Benna, how can you spot an uptrend? What's a key factor in the uptrend? If you can unmute yourself, are you able to unmute yourself? I don't know. All right, Benna may not be able to speak. Bernie, how can you spot an uptrend? Do you know?
Is it when you see more higher highs than lower lows?
You're seeing higher highs, and what are you seeing in terms of the lows? It's a partnership. Higher highs and also,
I thought you would see the same, well, no, not necessarily the same amount, but more higher highs versus lower lows.
you see higher highs and higher lows. Higher highs and higher lows is how you know that it is in fact an uptrend. Okay. So the lows come into play. So when you look at this right here, you definitely see. Okay, so this is where we begin. Right? We start here. Here's the high. Then we have a low here. Here we're going to have a higher high. And what is this low? What kind of low is this?
The higher low?
A higher low. Just as simple as that, a higher low. Then a higher high. What's going on? Oh, I lost it. Higher high. Higher low. Michael, what you gonna have here? You can unmute yourself and tell me, or you can type it in the chat. What is this gonna be? Is this gonna be a higher high or a higher low right here? Don't be shy. Okay. Bernie, you wanna help me out?
High?
A higher high, yes. So each high is higher than the previous high. Each low is higher than the previous low, right? A higher low. And it's just, that's how you can determine that it's an uptrend. So each time there's a pullback where it goes back low, it does not break down here. It does not come down to this previous low. The next low is higher than the low that was there before. Makes sense, right?
Yeah, so in other words, it's still a low, but it's higher than the previous low.
Exactly.
Got
It's
it.
be always higher than the previous low. Exactly. Thank you, Mr. Dollar. Yes. So that is how you can spot an uptrend. Now, if you get into a trade, you did your analysis and you say that price is going down, you're selling, but then you keep seeing price making higher highs and higher lows, you just need to get out. You don't need to wait on it to hit your stop loss, because clearly it's doing something else, and that can happen, right? We can do all the analysis in the world, think that we have it down pat, think that we're the technical analysis or technical analyzer extraordinaire, but we're not always going to get it, you know? We can't be 100%. Sometimes we won't even be, we can, sometimes we're 70%, 60%, even 50% accurate. It's okay. It's just knowing, okay, it's not going in the direction that I thought it was going. Let me cut my losses. Let me not even wait for it to hit my stop loss, especially when you see it's like a strong trend. Have you been in a trade and seen it just trending, like going, like it has somewhere to be and it's running late and it's like going, but you are in the trade going in the opposite direction? You need to just get out. Exactly, Mr. Dollar. You just, when you see that happens, just get out. Don't wait. Why lose $50, $100 when you could just lose 10 because you see that the trade is not going according to your analysis, okay? So that's why I like to trade trending markets, because you basically know what direction it's going in, right? So that is the uptrend, right? If you need to take a picture, go ahead, take a picture of this uptrend, and let me just type it. You can spot an uptrend by identifying, I hope my spelling won't deceive me. Okay, no, it's not. Higher highs and higher lows. There, right? So that's it. Uptrend, you're looking for higher highs and higher lows. So that's the uptrend. Give it 5 seconds. 5, 4, 3, 2, 1. Okay. Now I'm going to delete. And we're going to look at the downtrend. So if the uptrend, you're looking for higher highs and higher lows, Mr. Dollar, what would we be looking for when it comes to the downtrend?
We'll be looking for buy.
Pardon me?
We'll be looking for buy for downtrend.
No. If it's a downtrend, you would not be looking for buys. If the market is trending down, you would not be looking for buys.
Sorry, sell.
Yeah, okay,
Sorry, sell.
right.
Sorry.
So yes, you'll be looking for sells, but based on what I was just talking about, what would we be looking for? I just stated that for the uptrend, we're looking for higher highs and higher lows. So for a downtrend, we'd be looking for the opposite, right?
Yeah.
Okay, so the opposite of higher highs and higher lows is lower highs and lower lows. Okay, so let's draw that so we can see what that really looks like. So we're gonna start at the top instead. Down, up, down, up, down, up, down, up, down. Let's see here. Lower highs and lower lows, exactly, right. So this is our starting point. We're going to make, we're gonna have, okay, so let's go with the high. Let's call this is the high, all right? So then this is the low. So this is gonna be the lower high. Can I move this over? No. And what would this be, Mr. Dollar, right here? You know, this is a low, lower high. So what would this be? Yes, lower low. Lower low, right? Bernie, what would this be up here?
Lower high.
Yes, lower high. Michael, Michael, are you sleeping? Lower low. Venna probably occupied with her princess. Lower high. Lower low. Lower high, right? So it's now going to be, okay. It's now going to be the reverse. I have Charles asking me for the Zoom link. 1 second. Oh, okay, awesome. I'll send it to you right now. Okay. Forward. There. All right. So there we have it. For a downtrend, it's going to be the reverse. Lower highs, lower low, lower high, lower low, lower high, lower low, lower high, and it's just going down. And we know that at some point it's going to turn around, right? So for a downtrend, we look for lower highs and lower lows, okay? And that is how easy it is to spot. There we go. That's how easy it is to spot the uptrend. Higher lows, higher highs. For the downtrend, lower highs and lower lows. Welcome to the call, Dr. Tambo, right? So we've covered the uptrend, we've covered the downtrend, but there's another way that the market can move, right? And if price is trending up, Mr. Dollar, you told me for the downtrend, we're looking for sells. For an uptrend, what are we looking for, Mr. Dollar?
We're looking for buy, actually.
Exactly, right. So in an uptrend, you want to look for buys. Some people will trade counter trend, but there's this saying, and I really believe in that saying, trade with the trend. The trend is your friend. I don't know who first came up with that, but that definitely is something that I agree with. The market is trending. Why would you want to go against that? Even if there's a pullback, just wait on that pullback and then you can get in, right? So if the market is not trending, that's when that other thing that you will hear people preaching, and you hear it all over social media, all over YouTube. Oh, buy the dip, or buy the floor and sell the ceiling. In a trending market, that doesn't work. In a trending market, you need to do something else. So if you guys are taking notes, I want you to write this down. In an uptrend, you want to buy the ceiling. Buy the ceiling of an uptrend. And in a downtrend, you want to sell the floor. You want to buy the ceiling of an uptrend and you want to sell the floor of a downtrend. Now, when it comes to buying the floor and selling the ceiling, that is ideal when you have a ranging market or a consolidating market. So whoever needs to take a picture of this, go ahead and do so. And then I'm going to show you what the consolidating market looks like. 5, 4, 3, 2, 1. And we have a new person joining us. Ola, welcome to the call. Thank you. Oh, Finsley, I forgot. Finsley, hi, how are you? Finsley. Hello.
I am enjoying the meeting.
Thank you.
Yeah.
Thank you.
All right.
It's been long overdue. Long overdue. All right, so let me go ahead. Okay, we have Topi. I don't know if I'm pronouncing that right. All right, so that's that. Now I will go over consolidation, and then once I'm done with that, I'm going to show you how it looks really on TradingView, right? All right, so now we're going to look at the third thing, and that's a consolidating market, right? Consolidation. Consolidation. Right. So with consolidation or ranging market, let me go ahead and put our ranging market. Price hasn't really decided one way or the other. It doesn't know if it's coming or going, right? So with that, you will see something like this. You will see it go up, you will see it come down. But then you'll see it go right back down. It'll go again, it'll go again. And it's just gonna be doing that like ping pong. It's just gonna be doing that in between a level of support and resistance, right? So guys, please do not criticize me for my line drawing skills. Almost made it there. All right, so this is the floor, right? And the floor is also known as what? What's another name for the floor? Let's see. How many minutes, please? I don't understand what this question means.
The support.
Okay, support. Yes, Finsley. Another term is support. Support. It's keeps you, right? And then there. Now this is the ceiling. All right. And what's another name for the ceiling? The okay, ceiling. Can somebody tell me what's another word for the ceiling?
Resistance.
Yes. Thank you, Finsley. All right. So here, every time price comes to support or the floor, you can buy, right? You can buy every time it comes here. And every time price comes to the ceiling, you can sell. Now you can do that. Can I move this? No, I can't move this. You can do that in a consolidating market. You can buy the floor and you can sell the ceiling. Now, price is not going to do this forever. It does it for a time. There are some people who just trade trending markets. There are some people who will trade consolidation. So remember, I said that when you do your analysis, you cannot be right 100% of the time. So imagine you're buying, you're selling when it comes up top, you're buying when it's at the bottom, you're selling when it's at the top, buying, selling, buying, selling. At some point, price is going to break out. It could break above or it can break below. You don't know which way it's gonna go. you know, in life, you want to be proactive. You don't want to just sit around and wait on things to happen to you. You know that, right? Some people just sit around and wait on things to happen to them as opposed to taking actions. It's like your health, like with your health, for example. You can do things that are healthy to ensure that things go a certain way, while another person may not do the most healthy of things. And then when they have health challenges, then they have to go to the doctor when they didn't have to have that happen if they had made good choices before, right? If they were proactive with the things that they put in their body, or, you know, being active, doing exercise, whatever. When it comes to trading, though, forget about that. You don't want to be proactive. You need to allow the market to take the lead. You guys get that? You do not want to try to be proactive. You want to allow the market to do what it's doing, and then you react. The market will humble you really fast if you think that you can predict, oh, it's gonna do this. No, you don't know what it's going to do. Allow it to make its move, and then you follow, right? So yes, you can take the buys, take the sells, but understand that at some point, and you don't know when really, it's going to break out. And you don't know if it's gonna go and break the floor or if it's gonna break the ceiling. So you just wanna watch. And that's why having proper risk management also is very important, because if you are doing your buys and sells and everything is going good and you're making your profit, you don't want one trade not going in your favor to ruin all the profits that you are making, right? So you need to have your stop loss. A stop loss is something that will save you, right? You want to have your stop loss, so you know, okay, if I take this trade and it decides, oh, it's gonna go against me, once I lose X amount of dollars, I'm gonna be taken out of the trade anyway, right? So with that, you know, you can have control. So and I wasn't planning on covering this, but let me just touch on it briefly. You know, when you're trading, you want to risk 1, 2, or 3% of your account, right? 1% if you're conservative, 2% if you're moderate, means you can handle a little bit more risk, 3% if you're an aggressive trader. I do not recommend any more than 3%, but you know, we all are taking care of our own accounts. You do whatever you want. This is just a suggestion, but you do as you will. Now, if your goal in a day is to grow your account, say 4%, and you're risking 1 or 2% of your account in order to get to that 4%, you need to know how much you're willing to lose, because you can't win all the time. How much are you willing to lose before you stop? And your stop loss should reflect that. So if in your attempt to grow your account 4%, you decide that, hey, if I lose 2% of my account, I'm gonna stop trading for the day. Your stop loss should reflect that. Does that make sense to everybody?
Yes, that makes sense.
Okay, thank you. Thank you. Right. Because there's no sense in having successful trades and then with one trade you're losing 5% of your account. It's like, what was the point? It's like it defeats the purpose, right? In maybe next week Sunday, I will show you how to calculate your stop loss using the lot size calculator. That needs to be your friend, because with that you can know how many, based on how many pips your stop loss will be at, how much money you will lose, you're willing to lose, you can actually set it so that, hey, if it's 50 pips, if it's 30 pips, you can set it so that if it does hit your stop loss, if you determine that you're only going to lose $50, $40, $100, you know, as the case may be, depending on the size of your account, you will not go over that number. And, you know, it's just a beautiful thing, just things to keep you safe, right? So, I strayed talking about risk management, but it's important because in a consolidating market, it's gonna stop, it's gonna break the ceiling, or it's gonna break the floor. And when that happens, you want, when you get taken out of the trade, you don't lose too much. If you have a profitable trade, if you have 3 profitable trades and you have 1 trade that goes opposite of what you wanted, that 1 trade shouldn't cancel out those 3 trades that you actually made money on. Okay, so that's consolidation. And I know that there are some people who are joining me a little bit later. So the good news is I'm live streaming this on my YouTube channel. So once it's over, you can go back and watch and you can see what you missed. I covered uptrends and downtrends and consolidation so far. With an uptrend, I discussed how you can spot it, what you're supposed to be looking for. Same thing for the downtrend. What do you look for? How do you determine that it is a downtrend? And I stated that in an uptrend, you're going to buy the ceiling, and in a downtrend, you're going to sell the floor. So I have shown you what buying the floor and selling the ceiling looks like in a consolidating market. I'm going to show you what I mean by buying the ceiling and selling the floor looks like. Because when I first learned about that, I was a bit confused, right? So I'm going to cover this. Buy the ceiling. Buy the ceiling. And uptrend. Trend. Okay. Can I stretch this out? Okay, yeah. Buy the ceiling of an uptrend. Okay, so let's look at the uptrend again. We know it starts at the bottom, makes a high. Here we go. Higher high, higher low, higher high, higher low, higher high, right? So gonna put in our lines here. Oh, I'm an artist. All right. So those are our lines, right? So this is a ceiling over here, right? Ceiling. This is the ceiling because it hit here. Up, hit the ceiling, came back down. And then this is going to be a ceiling here. Ceiling. Hit the ceiling, come back down. And this is the ceiling here as well. Do you guys see why this is the ceiling? Finsley?
Yeah, I see. Because that's where it make the higher highs. That is where it make the higher high.
Okay, yes. So the high, that's the ceiling, exactly. Higher high, the ceiling. So you know what? Let me go ahead and label that as you say. All right, so that's the high. That's the higher high. Higher high. All right, yes. So where you see the higher highs, where you see the high, that's the ceiling. It hit the ceiling, it pulls back. It broke through the ceiling, made a higher high. It's a new ceiling. Broke through this ceiling, higher high, new ceiling. Does everybody understand that concept? Why I'm calling this the ceiling right here? Mr. Dollar, do you get it?
Yeah.
Okay, perfect. All right. So when trading, you look to the left. So that's why we're looking to the left here. And that helps us determine what we're going to do presently. So the past ceiling is going to now be the present floor. So when you go to the right, what was the ceiling is now going to be the floor. So that's why we're buying the ceiling, because the ceiling is actually now the floor. Yesterday's ceiling is today's floor. So you're buying the ceiling of an uptrend. Once it came here, it's established as a ceiling, pull back, it breaks the ceiling. In the retest, the pullback, let's put it right in here. In the retest, right in here, when this happens, it now becomes the floor, and that's where you will go ahead and buy. Let's put that right here. There's a lot going on here. So you're gonna buy right here, okay? So that's how you're buying the ceiling of an uptrend. So now it breaks the ceiling. Now we have a new ceiling here. So then when it retests or pulls back, right? This now becomes the floor here. And you're going to then buy. So that's how in an uptrend, you're just buying ceilings. You're buying ceilings. You're not gonna sell at the ceiling because it's breaking. It keeps breaking it, you know? It's like keeps shooting up like a rocket. So when it does a little pullback, that's when you want to get in. You don't want to buy when it's at the higher high. You want to wait on the pullback. So if you are noticing an uptrend, but you notice it when it's at the higher high, this is where patience comes in. You want to wait for the pullback to happen, and then you will get in. Okay. So let's label. So let's put it here. So again, you need to wait for the retest. Is it retest? And then let's put that. Yeah. Let it retest here, and then you're going to buy. Does everybody understand that? Dr. Tambo, Finsley, Eno, Topi. I hope I'm pronouncing.
Yes, it's clear.
I getting it.
Okay, awesome, awesome, awesome. Okay, so that's the uptrend. I want you guys all to take a screenshot, or if you were taking notes, you know, I think this is pretty clear. I'm going to show you the reverse for a downtrend. So recap, you buy the ceiling of an uptrend. The ceiling from the past, when it's the retest, the ceiling becomes the floor. And that's how, you know, you are buying the floor, but the floor was the previous ceiling. So you're buying the ceiling of an uptrend. It was something that I was having difficulty grasping when I was first learning it, because I just always heard that you buy the floor and sell the ceiling. But in a trending market, that's not what you're doing. You're buying the ceiling, which is the floor, but it's not, it's just different. Okay. All right. So now I'm gonna cover the reverse. I'm not doing too shabby. Maybe I could be an artist. I'm not doing too bad with drawing these lines, right? Do I get an A? A minus? No?
You're
Okay.
getting better as you go along.
I'm getting better.
Yes, you're getting better.
Thank you. Thank you. So for the downtrend, right, you're gonna sell the lower of downtrend. Okay. So reverse. So let's draw it out. And we start here, we go down, up, down, up, down, up, down. Right. So with a downtrend, let's go. Looking at the reverse. Same concept, but in reverse. So here's the floor. Wait, text, sorry. So I'm gonna so we're to the left, we were looking at ceilings before. Now to the left, we're looking at floors, right? And we're selling the floor of the downtrend. So this was a floor. This was also a floor up here, but we're gonna leave that alone. So here's the low. The low. There, low. Lower high. Lower low. Lower high. Lower low. Lower high, and so on, right? So we're looking for price to break and retest, break retest, break, retest, just the same. So when it retests, you want to sell, right? You want to sell. You want to sell. When it retests. When the floor wait, I'm sorry, I'm spazzing now. When the floor becomes the ceiling, you're going to sell. So it's the floor to the left. It's now going to be the ceiling to the right. Ceiling. Oh. Ceiling, right? So it's the floor here. Price hits the floor. It retests or a pullback, whichever one you want to call it. A retest. Let's just put it. Or pullback. Whichever one you want to call it. You know, it doesn't matter. It's just words. It becomes the ceiling, and that's where you're going to sell, right? It's going to retest here as well. Retest. When it pulls up, you sell. It retests here. You sell. Does anybody have any questions? It's just the reverse of the uptrend. Does everybody understand this?
Yep.
You got it, Finsley?
I got it. I
Oh,
got it. Yeah.
okay. Okay, awesome. Okay, perfect, Mr. Dollar. Right. So let's see. Okay. All right. So the floor, when the floor is broken with the retest, the floor becomes the ceiling, and that's how you sell. You're gonna sell now, right? So you're selling at the ceiling here, which was formerly the floor, right? So you always want to look to the left. Again, you know, when you're trading, you want to look to the left. You want to see the history, what was happening before, and that's gonna help you with your present decision. It's gonna help you with whatever you need to do going forward, right? So take a picture of this. I hope this will help some people. You know, it's really basic stuff. You know, buy the ceiling of an uptrend, sell the floor of a downtrend. When it's consolidation, you buy the floor and you sell the ceiling. But you need to be able to determine which one you're in. Because if you're in an uptrend and you're buying the ceiling, selling the floor, it's not going to work out good for you. If you're in a downtrend, buying the ceiling, selling the floor is not, buying the floor, selling the ceiling, sorry, is not going to work out for you. And if you're in consolidation, then you cannot be buying the ceiling or selling the floor. You said that you prefer buying. Okay, so if you prefer buying, you want to look for markets that are trending up, or if you're in consolidation, you want to wait until it's at the floor to buy. You know, there are some people who all they do is buy. There's some people who all they do is sell. You know, it's whatever, nothing is wrong. There is nothing wrong when it comes to trading, because there's so many different ways of trading. You just need figure out what works for you, and then have your rules that you follow so that you can minimize loss, because it's not going to be perfect. So with that, I am done for today. Does anybody have any questions before I wrap this up? If there are no questions, that means I am excellent. Like, are you guys telling me that I'm excellent? I guess. All right.
You
So
are excellent. Thank you.
you're welcome, Bernie. You're welcome. All right. So guys, thank you so much for joining me. I know I haven't been here in a couple weeks. So thanks for sticking in there with me. In YouTube land, if you haven't already, please subscribe to my channel. Also, like my videos. Feel free to put comments. You know, I'm always open to suggestions, and go and watch my videos. I need my watch hours to go up. I need to hit certain milestones in terms of subscribers. I'm trying to be like you, Dr. Tambo. I know you have a YouTube channel. You have a lot more subscribers than I do. I'm trying to get where you are, right? So that's going to be it from me this evening. You're so welcome. Oh, how can you get the link? All right, let me go ahead and
Thanks.
here. What do you say, Dr. Charles?
Thanking you for the training. Thank you for the training.
Oh, you are so welcome. Let me go ahead and drop this here. Paste. There's the link for this video. You guys can go back and watch from the beginning. Topi, am I pronouncing your name correctly?
Okay.
Tope. Okay, Tope. Thank you. All right, so Cleveland, thank you for being here, and we'll see you next Sunday, same time, same place. I promise to be here. Bye-bye.
Thank you.
You're
Good
welcome.
job. All right.